Hello everyone, welcome to the Truth About Real Estate Investing show. My name is Rosito, and did you know so many Canadians are struggling to get into the real estate market right now? It's all over the headlines. I wouldn't be surprised if it is the number one issue for the next election. Housing affordability, affordable housing, whatever you want to call it. It really sucks. I really feel bad for the younger generation and anyone who can't get into the market. One just needs to simply check the net worth of tenants. This is just pure statistics, folks. What is the net worth of tenants versus homeowners to know the path to avoid poverty is to be a homeowner. The exemption from paying gains on the sale of one's home is one of the very few tax savings that we Canadians receive, so why not take advantage of it? In a low interest rate environment combined with governments all over the world creating more and more money out of thin air, economic theory dictates to protect oneself from currency devaluation or from inflation is to hold hard assets, right? This is just basic school stuff. An ideal hard asset is something that's self-liquidating, as in it pays for itself, such as real estate. When you buy a house, you rent it out, and the tenant's rent pays all expenses and mortgage payments, and then in 20, 30 years or so, maybe a little bit longer, the house is paid off, and then one owns a cash-producing asset free and clear. Maybe you don't even want to own it yourself. Maybe you want to pass it on to your kids, and maybe they want to pass it on to someone else after that. Not bad, eh? Many of you already know this, and you got it right. You already bought properties. Sadly, many did not. And it's not your fault if you didn't. Schools didn't teach investing, and banks would rather sell you mutual funds than see you buy cash-producing assets, specifically houses. Don't blame the banks. Selling mutual funds is how they make money. There was even this sarcastic billboard in downtown Toronto that went up with the question, "Can't afford a home? Have you tried finding richer parents?" While there is some truth to that billboard, yes, many first-time buyers and buyers in general are getting help from their parents. Some of my investor clients too are getting help from their parents for their down payments and even to use their credit to qualify for mortgages. I hear it all the time from mortgage agents and brokers that we work with, and this was even before the pandemic started. So for anyone who's been following me for a while, all 17 of you, I know we gained about 3 of you over the last 3 months or so, but we had at least 1 or 2 who joined us about 5 years ago when this podcast started. Maybe one of you was on my blog that I started back in 2010. You know, we've predicted real estate prices will go up. Now, just specifically real estate prices on land, right? Because we've only talked about houses. 99.9% of everything I put out was based on land-based housing. Been talking about it since 2010. No one expected prices to go up 20% over the last 12 months period. But we've been sharing here and on my blog and at the IWIN meetings that I host for nominal prices, free for my clients, that real estate is going up in price. Me personally, I'm still offering on houses. We offered on a house just last weekend. I wrote the offer myself. My assistants it's the weekend. My assistants weren't working. I'm not as active anymore, so my assistants don't ever expect me to be writing offers. But Cherry and the kids were. It was a hot and sunny day. The kids were in the pool as they should be, which sucked for me because I was missing out on the fun. Such is the life of an investor. But I was delaying short-term gratification for long-term intergenerational gains. My preferred investment strategy will still allow me to cash flow even in today's market, and my team will be sharing how to execute the number one investment strategy completely free, virtually from the comfort of your home. As in, they won't be in your home, but you can enjoy it from your home. We will get back to in-person free trainings once we're allowed to. I can't wait. I love teaching this stuff. I love seeing people's faces. I love helping people. But for now, we're on Zoom. We look forward to helping more people every day, especially hardworking Canadians to get ahead in life. If you're on my email newsletter, then you're already good. You'll be notified of our next event. If you're not, well, that's just silly. Go to www.investortraining.ca, type in your name and email, click submit, and you'll be on your path to financial peace. We've already helped hundreds of investors already create 6-figure side hustles, and we're looking forward to helping thousands more. If you don't believe me, just ask my friend Matt Spada, and how the journey has helped him as a real estate investor. It started when his dad said to him, "If you ever want to get ahead in life, invest in real estate," and handed him a book when Matt was just 18 years old. That was 15 years ago. He's now 34. I think I got my math wrong, but he's now 34. It was a while ago. Matt was 18 at then. Matt's also our guest on today's show. Anyways, soon after, Matt and his dad Gino, they shot out of a cannon. right? They started buying a whole bunch of property over a short period of time. And I remember meeting Matt for the first time at a Rockstar VIP dinner event. Remember having dinner with people indoors? I think there was 50 or 60 of us. Anyways, I remember Matt sharing with me how he was concerned about paying, at the time it was brand new, the double land transfer tax if you bought a house in Toronto. He bought his in North Toronto, specifically Scarborough, Ontario. That was 11 years ago. Thankfully, they did the deal because I'm more than confident the house has more than tripled in value. Funny how investing in real estate can change lives. 11 years later from that meeting, from my first meeting, Matt Spada, he's no longer the 23-year-old I met in 2010. He's now a gym owner, so he's a business owner. He's a father of two. He was 23, didn't have any kids when I met him. Now he's a father of two. He was the owner of as many as 12 properties. Now he's currently holding 7, with a significant amount of equity in them. Matt also took our Stock Hacker Academy this past fall, and he shares how he's really enjoying it, which is totally awesome because I love hearing client success stories. And Matt and his dad Gino are gym owners. I'm quite confident they could beat me up without breaking the sweat. Anyways, here is the story of how a 19-year-old Matt Spada got started investing in real estate. I hope you enjoy. Hi Matt, what's keeping you busy these days?
Oh, right now, 2 kids at home doing online school. That's keeping me busy. But I got 7 rental properties on the go, options trading, and well, unfortunately, right now our gym business is closed at the moment. So just kind of anxiously and patiently waiting for that to reopen.
So you mean okay? That's a bit of a mouthful. You're a dad. You have rentals. You have a business. You do options trading. I like to say
Mhm.
selling, selling.
Sure,
You're
sure,
selling. You're
yeah,
selling mostly, right?
yes,
Okay. You're not
yeah,
the. You're not the other.
pretty
You're not
much. That's all of it, what I do. Yes.
excellent. Excellent. Okay. It's much easier and more peaceful that way. And yeah. But your day job is to operate a gym,
Yes.
assuming it was
Yes.
open.
Yeah. So yeah, right now we're closed. We've been closed for 2 months now. On this last round of lockdowns. So and it sounds like it's going to be about 2 more months at least before we get to reopen.
And then prior to that, how long were you closed?
So we were closed originally for 4 months in the first lockdown. Then we reopened for 4 months. Then we were shut down for 2 months. Then we were open for 4 weeks, and now we're shut down again.
How do you talk to other gym owners? Like
Yes, a little bit, yeah.
how are they
Yeah.
doing compared to you
Um,
guys?
yeah, I mean, for us, we're in a little bit of a better situation from the fact that we own our building. So, fortunately, about 20 years ago, my dad had the foresight to purchase a building to house the gym. And after like 17 years of renting, he decided to buy a building. And we actually paid that building off 7 or 8 years ago. So we don't have that expense right now, which is really helping a lot, not having a rent or mortgage payment. Other gyms, yeah, they're struggling a lot because of that. We have no income. It's pretty hard to pay bills. So,
And is rent among their biggest expenses?
yeah, typically.
Damn. But yeah, are you guys passionate about owning buildings? Because the point I'm trying to sorry, I'm trying to the voice in my head, the conversation in my head that is like follow your passion and you'll never work another day in your life. So buying the building was part of your passion.
No, just seemed, I think, well, I was pretty young when my dad bought the building, but for him, I think it was just a logical next step.
Oh,
He kind of,
logic. Oh, not following passion, eh?
when he owned, he had that gym for 17 years at that point, and he was also working another job, like a full-time job at a factory at that time.
Oh.
But he decided that the gym wasn't going anywhere, so we might as well own the building that we're gonna be in. So bought a building in downtown Port Colborne. And it was probably one of the best decisions that he ever made for that business, which had nothing to do with fitness or anything.
Yeah, I don't know if that's good. You know, I think it's my problem that I just watch too much social media,
Mhm.
and too many people are just touting stuff that people want to hear, right?
Yeah,
Like the one I just said, like follow your passion, never work another day in your life.
yeah.
Sounds like you guys work. Like
I guess.
you guys showed up, you worked, you invested,
Yeah,
right?
and we still do that now. Yeah.
Right. So yeah, so poor Colburn. Okay, so hang on. Pardon, pardon the ignorance. I have a feeling a lot of people don't know where Port Colborne is.
Yeah, probably not.
Where is it?
So we're in the Niagara region,
Uh-huh.
right on Lake Erie. So kind of maybe say like 20 minutes from Niagara Falls area. Not really on any major highways or anything. So it's kind of, off the beaten path a little bit.
Mhm.
We're close to Welland. Welland would be the next closest city outside of Port Colborne.
I think a lot of people know Welland these days.
Yeah, it's becoming more popular. Even Port Colborne, I gotta say, it's becoming more and more known. So
Oh, interesting. Are you invested in either area besides your gym building?
not besides the gym. So we own the building in Port Colborne, but we do have a rental property in Welland, but nothing in Port Colborne.
Interesting, interesting. Welcome back. Okay. Uh, oh man, so many directions to go. Because part of the interesting story here is that many small businesses are suffering, right? But you guys managed to keep your head over water. But I don't know if I don't know if keep your head over water is the right term, because uh, how much financial hardship is this? And I don't mean to pry, but I
Well,
do
I
want people
mean,
to know
yeah.
what
Okay.
because
Well, we have no income coming in, and for the majority of the past 15 months, we have had no income coming in. Um, Even when we were open, it was always with restrictions, and we were at best 50% of normal when we were open. So yeah, it's been financially a challenge for sure. Like I said, owning the building has helped a lot. One other thing would have been that we've always um, tried to do our best to keep a pretty decent cash reserve in the bank for emergencies. Not ever seeing something like this coming, but having that was huge because we definitely had to tap into that quite a bit to stay afloat. So, um, and I mean, I got to say too, the government programs that we qualify for do help a lot too. So, but yeah, we're surviving. That's all we can do right now is survive. So,
mhm, mhm.
outside of the gym business, is we have our rentals, our real estate portfolio, which again is like allowing some kind of peace of mind too, because that's doing really well actually through all of this. So having that as well kind of makes up for what we're losing in the gym business.
Kind of well, eh? All right. So you mentioned 7
Yeah.
properties. How did this all start?
Yes. Well, for me, it started. It's about 19 years old, I would say.
Wait,
My
how long ago was
dad
that?
at that. So I'm 34 now. So whatever that math is.
15 years ago.
15 years.
Good time to start investing. 15
um,
years ago.
yeah, I didn't start quite then, but my dad planted the seed back then. Was he had just started flipping a bit. He was buying some properties, fixing them up and reselling them. He did that a few times, and I was just kind of watching and going to the properties and helping out a bit. Um, and then one day he just said to me, if you ever want to get ahead in life, you should really think about investing in real estate. And he gave me a book to read. and he just left it at that. So it was up to me at that point if I was going to read it and, go down that path or not. And I read it, and it was, something that was very interesting to me. So
What
then
was the
I just
book?
started. So that book in particular was called The Weekend Millionaire. It was like, I don't think it's a very well-known book. I don't even know how he got it, but it was just about basically doing real estate as a side hustle, basically on the weekends. And so then he had a bunch of other books in his bookshelf. So I just started picking through them and reading them all. And from there, he took me to a couple of rain events. That's where, so I was still maybe 19 or 20 then. I went to a couple of those. And then we
Oh, sorry,
joined
Matt.
Rockstar.
Those are
Yeah,
pretty far away. that's
Toronto. Yeah. So like a
that's
little over an hour away.
okay.
Yeah, not too far. I guess for us out in Niagara, that was normal
Yeah.
to drive out there to go to conferences and things like that. So, um,
But I just want
but
to paint.
yeah,
I just want to this for people to know, like you're making the effort, right?
yeah,
You're
yeah,
you're putting in the time to invest in yourself to learn, get educated,
yes,
and you paid money. You
yeah,
paid.
yeah,
I paid more than 10 grand to that organization just in membership fees.
yeah, yeah. We would stay there for the weekend because it wasn't that close, right? I mean, not
Right.
that an hour and a half drive is far, but we would just, because it was usually a weekend event, we would just stay for the weekend there. So we were paying for a hotel room and stuff like that, but well worth it. And
I miss those
yeah, so
days because
yeah, I know, eh?
I was
Jeez.
self-employed, so I didn't have like those conferences that people would go to for work, and like so we'd use that
Mhm.
like that weekend as an excuse to like have some fun.
Yeah.
Because we'd stay in the hotel too, even though like even home was only like
Yeah.
home was like 30-40 minutes away, but
Yeah.
just stay in the hotel and
Yeah.
yeah. Sorry, you said you joined Rockstar short after that?
Yeah. So my mom came across an ad in our local paper in Niagara for Rockstar Real Estate. I was back then about 20 or, yeah, about 20. So we went out to their free training class, joined them, and then learned about rent to owns. My dad said, let's do this as 50-50 partners. Got to come up with 50% of the money, 50% of the work. We'll do it from here on out as partners. And we jumped in right away, bought a property right away, and just kind of snowballed from there.
Where did you come up with your down payment money? Where did you come up with your 50%?
So I was working full time at the gym and living at home. So I was saving money quite a bit. And I had started saving money for this when I was like 19, when after I, first started reading those real estate books and things. So it seemed like a really kind of nice program for the investor end as well as the tenant buyer. So we jumped into that. That's what we started with, is rent to owns for the first probably 5 years. That's all we did. And we bought 7 more properties after that first one in like a 15-month period. And yeah, I remember my friends thinking I was nuts because I was still living at home through all that, buying all these other houses for other people to live in, but I still living at home with my parents. And yeah, but in the end, after that, I was able to pull out money for my own house out of that portfolio for a down payment on my own house after a couple of years. So
What were your friends doing? Why were you the crazy one? What were they doing that was so smart?
honestly, not much. I don't want to, make it sound like, that they weren't doing anything, but they were buying their first houses, buying cars, things like that. I
Cars.
still
Those are good
like
investments.
going on trips. I can't, like, I was going on those trips too, but yeah, I just took a little different approach, I guess.
Right. Yeah. I actually just want to raise a point I hear this often is, don't take advice, financial advice from people who don't make a lot of money. Were these friends making a lot of money? The ones that thought you were crazy? Sorry, Matt. I think we froze there. Are we back? Hey, Matt.
Yeah, I can hear you. Okay, there it's back.
All right. Sorry about that.
That's okay. I don't know if that was on my end or.
Yeah, I don't know. Sorry. So sorry. My point was, it's. I think it's good advice to not take financial advice from people who don't make money, who don't make a lot of money,
Yeah,
right? So,
yeah.
what were these guys doing that was so smart that that they thought they should give you advice that tell you that you're crazy doing what you're doing, buying houses for other people?
Yeah, they weren't investing, that's for sure. Just, I guess, investing in their own enjoyment, cars, and yeah, but buying their own first houses and things like that. Um, so yeah, we just had a little bit of different approaches to getting started in life, I guess.
Like you're a dad now, and looking
Yes.
also looking back, like would you have done anything differently? Would you have stayed home, or and then
I
then the
know.
lesson is almost do you apply it to your kids? Would you rather them stay
Mhm.
home and invest, or would you rather give them the boot?
No, I think, I mean, that gave me, an opportunity to get a head start. So I wouldn't change anything, and I would offer that same opportunity to my kids for sure.
Uh-huh.
Because now looking back, it's made a huge, huge difference in my life, having that opportunity and having being able to save money to be able to come up with a down payment for these
Mhm.
investments and let them work for me over these years.
So so say you're your kid. Let's see if this will make sense. Say you're
I'm
your
my
kid.
kid. Yes.
Would you make
Okay.
the same offer? Like from when you were 19 years, like 21 years oldish? Would you go 50-50 on your with your
Mhm.
kid on an
Yeah,
investment
absolutely.
property?
I,
Yeah.
I mean, I would have to. I would have to because I know, like I said, I know what it did for me, and it was life changing. So,
Right.
yes, I would jump at that opportunity. I hope that when they're that age, that they have that interest.
And I bring it up because I know there's a lot of young people that listen to the show, and they're often asking, wondering, they don't think they have a down payment. And for my clients, the
Mhm.
first place I usually direct them to is, have you talked to your parents? Because I'm same as you.
Okay. Yeah.
I would in a
Mhm.
heartbeat help my kids, right? Especially
Mhm.
investing, right? Pay like to me, it's my job to pay for their education, yeah, and yes, it's to me, it's my job to help fund their some of their investments, right? And but
Mhm.
I have some listeners, I have some clients who don't think to speak to their parents about investing in real estate
Yeah.
together.
Yeah. I I really actually hope that I'd be able to do that. And I know that with me and my dad doing it together, it's just even, it's created a bond even stronger, I think, father and son being in business together and investing together too, outside of just the normal dynamic. So I'd love to have that with my kids for sure.
Yeah, because like for you guys,
But it'd be the same deal. I'd like to see them do half the work, come save money and and learn as they go,
I'm pretty lazy. I want them to do
knowing
all the
that
work.
all the work, yeah. Uh,
Like who's putting up the credit? Did you put? Are you on the mortgage? Were you on the mortgages?
yes, yeah, I had an
Oh,
income.
oh yeah, yeah. Okay, so yeah, so
And
you
I
guys are
had
pretty
no,
even down the line then.
no debts, no liabilities living at home, so I'm sure that helped the mortgage application for sure.
Very nice, very nice. I guess I don't know how you thought you were perceived within the Rockstar community, but you were the father son duo. You were Gino and Matt, right?
Yeah.
No one said your name independent of one another. It's like salt and
Right.
pepper,
Yeah.
right? It's always salt. And, oh, there's
That's funny.
salt. There's salt from Salt and Pepper. Like, there's Matt from GM
Yeah.
and Matt.
Yeah.
Right? Yeah. And so, like, yeah, you were a dynamic duo, a power couple of sorts. Hope he doesn't listen to us.
I'm sure he will.
So you're working at the gym. Uh,
Yeah.
you bought. Okay, so tell me what you bought. What year was it? Where was it? What is it? What you
Okay.
bought? Tell me what the
We
price was.
started out 2009 was the first
Right after the crash.
property.
Perfect time.
Yeah. On the Stony Creek Mountain. And we bought a
Sorry for
single
the for the
family.
listeners' benefit. It's like just outside of Hamilton proper. It's technically part of
Yeah.
Hamilton now, but yeah, Stony Creek. Yeah.
Yeah. And it was a nice brick bungalow with a detached garage on a corner lot. We paid $241,000 for it. And then because that was a rent to own, we collected a $15,000 option payment up front.
$15,000.
That was, I think that might have been at that time through Rockstar the biggest down payment received. And now I know people are doing much bigger ones than that, but back then that was a big one. And yeah, we had that prop. We don't own it now, unfortunately. But we went 3 years with a tenant buyer in there. They divorced, so they left the property. We did another rent to own with another couple, and they ended up buying out at the end of their 3 years. So
So you rented it for 6 years total as a rent to own.
total, yep.
Do you remember what the rents were and what you exited for?
Yeah. We originally rented it out for $1,500 a month to the first tenant, and then when we re-rented it out, it was for $1,800.
Boo-hoo, they left.
And then and then we ended up selling to them for, I believe, $340.
So that is still a fantastic return for you.
Sure, absolutely it is. Yes.
Do you know offhand what that
Can't
return?
complain, but
like that's $100,000
no, I
in
do.
6 years.
No, no, from 240 to 340, $100,000 over 6 years. Yeah.
Yeah. And did you have to renovate or anything? Like
we did
basement suite
absolutely
or
nothing.
Absolutely,
we did absolutely nothing. We didn't do a thing. Even between tenants, we painted in between tenants. That's it. But our first tenant, they built a new deck. They put up a fence. They paved the driveway. They did all this stuff for to the property while they were living there. So
they should have just
yeah,
bought it.
We did all right.
They should have just bought it.
I don't understand it.
Yeah. Sucks. Oh man. Do you know what the market value was? Even after you let it go for 340?
What it is today, or what it was when we
no,
at
then
that time?
I'm guessing the 340 was under market
At that
even
time,
at the time.
It was a little bit, not a ton, but it was a little bit undervalued. Yeah.
Got it. Okay.
So we left a little bit of money on the table there, but the tenant buyers, they got instant equity. So it was nice for them. They were good people. So
good. Well, that's the whole point of the strategy, is to help people, right?
Yeah.
Can you kind of like high level explain a rent to own? Because
Sure.
I'm
So
sure some listeners won't know what it is.
it's a program basically allows a tenant to enter into an agreement with the landlord to have an option to purchase the property at a certain price in the future. So typically it's about 3 years, and you would agree upon a price up front. And part of their rent every month goes towards credits, towards the purchase price. So they're going to put down a deposit up front, which is the option fee, that goes towards the purchase of the property at the end of the term. And then every month they're earning credits as well that go to that, towards that purchase price. Ideally, in the end, they end up with close to a full down payment from their option fee and their monthly credits to allow them to buy the property. So they have to have good incomes, but maybe their credit isn't in the right place to qualify for a mortgage at that point in time. But they get to go into a home that they get to treat as theirs, that they're going to one day buy earlier. They get in earlier than they would if they had to wait and just rent somewhere and try to save a down payment on their own.
Excellent. Very good explanation. Do you want to hazard to guess what the current market value of this house would be?
Holy smokes. Maybe 750.
I don't know how big it is, but yeah, my first thought was at least double. Was it a big one?
Yeah.
Oh,
It was about 1,500 square feet.
that's a big one.
It was a nice house, like really. It had, like I said, a detached garage, and in that area, most of the houses didn't have garages.
Right.
It was a corner lot, so it was a little bit bigger lot than normal too. The garage itself was like fully insulated, had its own it was heated and everything.
Mm-hmm.
It was a nice place. Sorry that we don't own that anymore, but what are you gonna do?
For the investor, I think that wants more surety in their investment. Rent to own makes sense. Also, some more cash flow because the rent's higher.
Yeah,
but yeah,
and I think it's a great way to get started, because the typically the tenant is also a little bit easier to manage, I would say, because they're taking better care of the property, because
they didn't just take care of it; they renovated for you.
Yeah, well, in that case,
pocket.
yeah, that wasn't always the case with all of them, but yeah, that does happen because it's just a different mindset that they have.
Yeah.
So you're not getting phone calls for little repairs and things. It's a lot easier to manage. So I would recommend it for people getting started as a good entry into getting into real estate investing, for sure.
Yeah, it's like property management light, because the tenant has skin in the game. The intention is that they're going to own the home. That they are a much easier tenant profile usually to deal with.
Mm-hmm.
And again, they give you the $15,000 up front, so of course your cash flow is better.
Yeah. Right.
That's amazing. And then
they don't all go that way.
They don't all go that way. We'll get to that. We'll get to that actually. And then how many more rent owns did you do? Because you guys shot at a cannon.
Yeah, we did. So like I said, we did 7 more pretty fast. So in about a 15-month period. And then we kind of slowed down after that. But at one point we had 12. And then we sold some off through the tenants buying out. And right now we're at 7. But none of them are rent to own anymore. They're all straight rentals.
Because was there at some point you decide not to sell any more properties?
Yeah,
especially when you leave money on the table. We're not selling these anymore.
I mean, I'll tell you one that was really hard to let go. We had a place in Milton, and that
market's exploded yet.
Holy smokes! And when we sold that one, it was probably $150,000 undervalued when the tenant bought that one out. I think that was at that point so the market had started taking off. So like it was really hard to come up with buyout prices, and so we were leaving money on the table in that sense. We weren't losing money by any means. We were still doing well, but that, and then it was also getting harder to qualify for mortgages. So as we were some of these were selling off, and then we'd go back into the market to try to buy houses, we were having more trouble qualifying for mortgages. So we decided, as these ones that were still on rent to owns, as they were kind of expiring, that we were just going to stick with straight rentals from here on out. So
Rational decision. What?
So
Oh, can you explain a buyout price to the listener who's not fully familiar with rent to owns?
the buyout price would be an agreed upon price up front that we would set, that we typically at, when we're doing it, we're using like CMHC kind of projections for those areas, which were like 3 to 5% a year appreciation. That's kind of what we were doing, compounding that out. So for three years, so there'd be a buyout price after year one, and then another 3 to 5% increase after year two, and then same year three. Um, that's how we would kind of set our buyout prices. And then the tenant would agree to that upfront in the option agreement. So
In hindsight, CMHC was pretty low on their projections.
yeah, pretty low.
Because remember the story out of
And
CMHC was always everything's unaffordable, everything's unaffordable, everything's
yeah,
unaffordable. Prices can't go can't go up much more. 3 to 5
and
percent.
yeah, I remember in some when we were filling some of these, um, you know, meeting with prospective tenants, and they're like, "Well, what if the prices don't go up this much? Like, how do you know that the prices are going to go up to this price? What happens if it's not worth that much at that point?" And I would always say, actually, I learned it from my dad, but his response was always, "Well, what if it goes higher than that? Do we get to or do we get to increase the price because it goes up more?" And that's what happened. It went up more than these prices were set. So, but it was always like everybody's fear was always with rent to own was always that the price was going to be too high at the time of buyout. So that was never the case.
You guys are such nice landlords. I wish I rented from you guys and I could bank 150 grand. uh, so two other things I want to cover. Okay, so you mentioned not didn't always go well. So this is the show
Yeah,
is called The Truth About Real Estate Investing Show.
right.
Things don't always go well. It's not always sunshine and rainbows dealing with tenants and dealing with property. And I just
Yeah,
recorded a video before this about how lumber prices are like 300% higher than they used to be.
yeah.
Right? It's crazy.
It's crazy. I know.
Heck, I bet all the steel in your gym is probably worth a lot of money. Even just just
Probably
workout equipment's gone up in price
just
too.
the equipment. Yeah. I mean, I not so much now, but I was getting, especially in the first lockdown, emails and phone calls almost daily for people. Are you selling equipment? Are you renting equipment? It was nuts.
So tell me, like, has it? So you have some bad tenant stories, right?
Oh yeah. So we've had some of the best tenants you could ever ask for. We've also had some of the worst ones you could ever imagine. So uh, um, I don't know whether you want to hear like
Oh yeah,
some
tell me.
stories or yeah. Okay.
How do you find these tenants? Would they did you screen them?
I mean, the one that we had that was like the worst we've ever had was one we inherited. So no, we didn't rent to this
Right.
person, but
That's actually a very
we
common story.
inherited.
It's often the inherited tenant.
Yeah, it was bad. Like police involved almost on a weekly basis. She lit our front porch on fire. Like terrible things. She actually we got her out because she went to jail. So that's how bad it got. So, but we've had people just wreck the house. So we had to do like complete renovations, like gut the place and redo the whole place because of tenants. Yeah, I mean, you name it, we've been through it. Other than the whole house burning down, that's the only thing that hasn't happened to us.
Like, knock on wood. Everyone, knock on wood.
Yeah. So
Eh,
yeah, I mean, that's part of the game too. So you got to be prepared for that.
so yeah, so like, it's part of the game. Like I've had floods, for example.
Mhm.
I have insurance for these things. I've insurance for tenant
Yeah.
vandalism. Like how is it? Like, so you say it's part of the game. What did you say to yourself at the time? Like what? Like you've stayed into investing. How was the decision that you would
Yeah.
stay in?
basically, I just always kept a long-term perspective. So yeah, today maybe something's going wrong and it sucks, but in the grand scheme of things, it's small potatoes, really. These events that happen that turn really bad, they're not common. They happen. Like I said, at one point we had 12 properties. And when you rent out 12 properties for 12 years, yeah, you're bound to have some hiccups along the way. But for the most part, it's been very good. So that too makes it a little easier to handle it when it goes bad, because most of the time it's going well. So you gotta take the good with the bad. And like I said, I think the biggest thing is to keep a long-term perspective, not to get caught up in the day-to-day, things going wrong. And that letting that get you down and losing that long-term perspective. Mm-hmm. In the end, over time, these things, they're just little blips in the radar over time. So, and you learn every time, you learn new things too. So it's a learning experience as well.
It's actually easier than ever now. Well, actually, with your inherited tenant, that's a tough one. Actually, I had a question on that. How do you remember the details on at what point could you just take over the property back over because she went to jail? Like, was she going to jail for a long time?
Yeah. So no. So she did about 3 months in jail. While she was in jail, we couldn't do anything, but she obviously wasn't paying rent, and she wasn't paying rent before that either. But no, we weren't able to do anything while she was in jail. It was when she came out of jail. The reason she went to jail is because she assaulted the neighbor. And when she came out of jail, she was released back into the home, which was a duplex. So there was another family living there as well. She was released into the home, basically under house arrest. She wasn't allowed to leave the property. She wasn't allowed to go outside. It was the terms of her release because the neighbor had a restraining order on her. Well, she broke that a bunch of times, and the police told her she wasn't allowed to live there anymore. So she had to move out, and she was forced out by the police. Basically, she was forced to move because she wasn't complying with her release orders. So once she vacated the property, we were able to go in, take pictures that she vacated the property. She met with us to sign an N11, basically to end the tenancy. And that's how she knew she couldn't come back anyway. So she agreed to, we basically said, we won't come after you for all the rental arrears if you sign this piece of paper, because she owed us about 7 months rent. So, and she signed it, and that was the end of it. So
that's a good deal for her. 7 months of rent to
just
sign a piece of paper.
It was a good deal for us, believe me, just to let, yeah, it was one of the happiest days ever when we knew she couldn't come back.
At the end of darkness, there's always light. Now, did you use a lawyer or a paralegal for all this?
We got some advice from a paralegal, yeah, but no, we didn't end up needing to use one in the end, because it was a pretty easy, because she signed the N11, mm-hmm. So there was no need. We didn't have to go to the tenant board or anything for that. We just parted ways, luckily.
Besides your dad, did you have any support through this process? Were you talking to anyone?
Him, and then in that particular property, we bought it with a joint venture partner, who was one of my good friends. Actually, he wanted to get into real estate investing.
Is this one of the ones that laughed at you when you first started?
No. Okay. No. So he wanted to get involved in real estate, and at that time we were looking to buy a property, but we needed someone to qualify for the mortgage. So we partnered up with him. It was a good way for him to get a foot in the door, real estate investing, and kind of have us as, I guess, kind of mentors through the process so he could learn. And we were partners on it. So for him, his first investment property was a rough one to start with. Today it's great, but then it was pretty rough for him. So he got a lot of good experience. And
Good thing he wasn't alone. Oh man, can you
Yeah,
imagine if he
oh,
was
I
alone
know.
on this?
He would have quit. That place would be for sale for sure.
Okay, where was this property? Do you like,
It's in Fort Erie, so in the Niagara region in Fort Erie.
oh, no wonder it's such a problem. No, I'm kidding.
No,
I know
this is
nothing
in
about
the
Fort Erie. I'm
actually.
just making that
Oh no, it's in a
up.
nice neighborhood in Fort Erie. It's called Crescent Park. It's actually where I grew up. So
Oh, cool.
yeah,
Do you remember what you paid for it?
350.
Any idea what it's worth now?
Mm, I'm gonna guess around 500, close to it.
And it's been how long?
About 2 years.
That's not. I wouldn't call 2 years long term perspective. Like you don't need. You don't need
No,
left. But
definitely not.
I was gonna guess it took longer than that. But how's your JV friend doing now?
No.
Is he?
Oh, he's doing great. Yeah, it's a pretty low maintenance property now. And like I said, it's a duplex, so there's two tenants in there, and they're both great. So we never rarely hear from them. So yeah, he got a really tough first experience, and now he's getting to experience the good side of
Sure.
it.
Yeah, I think every property usually has a stabilization period.
Yeah,
Usually it's renovations.
yeah,
Usually it's like a house that's a bit older that has a stabilization period. But yeah, and bad tenant stories often it's inherited tenants. It's just again someone else screened them. For sometimes actually I had one property like this. The tenant was a big factor of why the seller was selling.
yeah. I imagine that was the same in our case. It was never portrayed that way to us. In fact, the selling agent was like, she's a great person, had nothing but good things to say. But yeah, I would have to think that that was part of the reason for selling the property. There's just so much to deal with.
That's why it's good to talk to the neighbors. Have you been assaulted
Yeah, well,
before
yeah, we.
by the occupants of this house? So, how's your investing now? Are you still active on the real estate side? We'll get to the stock option selling in a bit.
Yeah. So that was the last property we bought. So it's been about 2 years since we've purchased another property. Um, so we haven't been actively buying, but still actively managing. Still, yeah, we just had a vacancy. Now we're renovating the property right now to get it ready to re-rent. So just basically managing at this point,
Mm-hmm.
7 properties, and really trying to figure out now what the next step is because we got a lot of equity sitting in these houses. So there's opportunities to do something. Just haven't really decided on what the next step is yet.
So, Matt, you're a smart guy and you read stuff and you're pretty well versed in investing. Like, imagine if you didn't do real estate investing, where do you think you'd
Mhm.
be? Like, like, the other side of the question is like, how much better, how much improved is your net worth having started investing when you did, or just investing at all?
Uh, I don't even know where. I mean, I obviously we'd still have the gym business, but net worth wise, it's you probably have little to none. I mean, I'm sure I would have bought my own house and I'd have some equity in that, but outside of that, it'd be nothing compared to what I have now.
At 34 years old.
It's yeah. I guess if I were to say like take somebody that I know that I've known for the last 12 years
Yeah.
and they didn't invest in anything except their own home and look at our two situations, yeah, the delta in net worth is quite significant.
Like 10x.
Yeah, or more.
Who's crazy now?
Yeah.
Speaking of crazy, I understand you took up selling options, stock options.
Yeah, yeah.
How's that going?
Thanks to your podcast, yes, it's going really well. I love it. Actually, it's so much fun. It can be stressful. I think it's more stressful than real estate investing in some ways, but it's a lot more emotional. But I don't know. Again, I have the same perspective or same outlook with the stock options as I do with real estate. Is it's long term perspective. So the day to day fluctuations, they can really get to you. But again, whatever. I don't care if something goes down a lot today. To me, I just think it's a good buying opportunity. In 10 years, it's not going to matter that it's down a little bit today. So,
I think one of the problems
yeah,
with
still
following
kind
the
of the same
markets,
approach.
I think part of the problem with like following stocks and stock markets. Well, I think first of all we shouldn't look at it as often as we do, because
Oh yeah,
yeah.
it's especially now with like being stuck at home all the time. It's too much. I'm on there too much.
Because just imagine if like you're looking at your real estate, like the price of your houses each day.
Yeah,
I think you probably do something rash, like, oh, that's a good price, I should sell it, right? And yeah,
yeah, yeah,
I don't think it's healthy to see it
yeah,
every day.
yeah.
Right?
In the real estate portfolio, I almost never look at that because like I have no intentions of selling. So it's once in a while I'll check and say, holy smokes, things have gone up quite a bit again. But yeah, with the stock options, like trading or selling options is a kind of a short term thing. It's typically 1 or 2 months out that you're
Mm-hmm.
selling, or at least that's how I do it, anyways. 1 or 2 months out. So that I guess that's short term, really.
Right.
But
No, but I think of it that I know I'm going to lose some, but I just know I'm going to win the majority of them. Right.
right,
So
yeah.
and over the long term. Right.
Mhm. That's something I learned is over the last 2 or 3 months in that is the losing part is to be okay with it, because I made a mistake of holding on to a loser for so long that it was just I was it's going to bounce back, it's going to bounce back, and just kept going lower and lower and lower. And anyway, that was an expensive lesson, but in the end, I just look at it as a lesson, as education. So, I'm only just started the stock options in any real significant way in January. So, um, after taking the stock option course, yeah, and like I said, it's been great. I've learned a lot over the last 5 months. I've done pretty well, I would say. Like in terms of return on your money, like 5 months in, I'm up about 21%,
That's
which
fantastic.
is crazy to me. Yeah, that's just crazy to me. Like I came out of the gates doing really well. I was in the first 2 months, I was up 18%. But I quickly went from doing like some safe stuff and doing well to getting riskier and riskier and getting into riskier stocks. And I was making good premiums. And then everything kind of crashed a bit with those growth stocks. And I was heavy into them at that point. So, yeah, I learned a lot there about the diversifying your trades, not just being all in one sector or one type of stock. Um, and yeah,
What
I
goes
took
up
those
will come
lessons.
down.
Yeah, I took those lessons, adjusted my strategy. I'm doing well again. And even those growth stocks, like I have some paper losses that I'm holding right now, but those are coming back now. And I'm able to sell covered calls against those positions and make even more premium. So it's a great little side hustle and way to make an extra income for sure. It's the one thing that attracted to me to it was, even though our real estate portfolio, it does really well, it's built a ton of equity and it does cash flow, but we typically leave that cash flow there for renovations or vacancies. Like I don't touch that. It's just sits there for when it's needed, because you always need to reinvest into these places or have unexpected tenant vacancies. So, but with the stock options, it's great cash flow. And once you close out that position, that cash is yours. You can do whatever you want with it, reinvest it, take it out, spend it, whatever. There's more, I guess, flexibility with the cash flow to do what you want with it.
Yeah, a couple of my friends, we like sushi, so we always joke around saying, like when we do a trade and that's a profitable trade, like, oh, that's a sushi boat.
Yeah.
Oh, that's two sushi boats. So if I make like $300 and I was like, oh, that's two sushi boats.
Yeah.
Yeah, it's funny. Yeah, it was a complete surprise when we discovered it. And what do you tell your friends and your dad what this is? What this crazy crazy thing is?
Mhm. um,
They tell you you're
yeah,
crazy again?
I've talked to my dad about it. No, no. I think they're a little more. So my friends, a couple of them are interested in it because they've seen what I did with the real estate, and now I've gotten into this. They think maybe it might be, maybe I guess I might be someone worth listening to, possibly. I don't know, but my dad, he's at a different part in his investing journey. He does not want to get involved whatsoever. He's he's pretty much retired, and he lends out. He does like private lending and stuff, but he doesn't want to be involved in making trades and watching markets and things like that. So I can't get him interested in it. Mm.
No, I find lots of people like real estate's it's quite a bit of capital to get in these days, right? So yeah, that's why I
Yeah.
find stock options are highly favorable. It's
Mhm.
complements real estate investing well, I think, because again, it's we can be defensive and still make money, right? And
Yeah.
it's for a lot of people they can cash flow a lot more doing stock options than they can with the real estate. Because your situation's not dissimilar where
Mhm.
there's not much cash flow at the end of the day. Like we're the same.
Mhm.
We leave our cash flow with our
Mhm.
properties because we know something's going to come up. The end of global
Exactly.
warming.
Yeah.
Like again, I had a flood last summer, right? Now we're now at that build retaining walls around on that property, so that there's always money coming out. So that's why we can't take cash
Yeah.
flow. There's that whole pandemic
Right.
thing that
Yeah.
that really hurt my
Yeah.
student rentals, right? Yeah. So yeah. So then I need alternative sources of cash flow, and yeah, this has been a bit of a gift.
Yeah. It's an awesome strategy. I'd recommend it to anyone, really. I mean, you don't need a large bankroll, like you said, to get started in it,
Oh,
and it's fun.
yeah, I find it fun too. Like I used to I don't know, I still love video games, but I don't have time for it. So this is my replacement.
Right.
That something that actually
Yeah.
pays.
Same with me. I mean, I've never really been into video games or anything, but mainly because I just never wanted to go down that rabbit hole and
Same. I'm stuck.
get sucked in.
Yeah.
So I kind of just stayed away from it. And but this is almost, I guess, yeah, the same. It's kind of not a game, but it feels like it almost.
It feels weird. Like we're talking about making money defensively, and like, it just shows up on your
Yeah,
phone.
exactly. It is strange. It's like you hit this button on your phone and then money just pops into your bank account. I can
Sorry.
see how people could get in trouble though with
Oh yeah,
this if you're
totally.
not disciplined, and because it is so easy to just hit that button and just keep collecting premiums, and next thing you know, it's like you're in way over your head, and it can get ugly if you don't manage your your account and your portfolio properly. So
Yeah, because it's no different than real estate. Each decision that you made to enter a property was quite calculated. So I think
mhm.
people kind of lose the diligence of when to enter positions, right? Because each time you bought a
Mhm.
property, there's a lot of things that were aligned before you entered that property. And the same, it's no different should be when you're entering a trade,
Right.
right?
Mhm.
like I'm sure one reason why you don't buy in Milton anymore is because hey, it's kind of a
Yeah.
little bit up there in price. That
Yeah.
house I bought for 400 is now 900. Maybe we should consider another
Yeah.
market, right? Right.
Right.
Or we should wait for the market that price to come down. Like that's not a good analogy because I don't think real estate prices are coming down. But
No.
stocks they fall in and out of
Yeah.
flavor, right?
Yeah.
So, like Tesla at 900 or 800 is not a good deal, in my opinion, right?
Mhm.
Tesla at 550 is probably a good deal. At least it's a better deal than
Yeah.
800.
Sure.
So
Yeah.
maybe I should wait for 550.
Right.
Right. So you can actually wait
Yeah. And
versus waiting in real estate didn't work out well for anyone.
exactly. And having that patience is key. Like that's something I learned too, because you can easily fall into that, fear of missing out when a stock is moving up. It's like, oh, it's just going to keep going up, and you want to jump in there. But
Yeah.
always, I've now learned that you always wait for the pullback.
It'll always pull back.
It'll always pull back at some
Yeah.
point.
Yeah.
If it's not, in the next couple of weeks, maybe in a couple of months, but there's always other opportunities. So you don't have to, jump into these trades that are already getting ahead of themselves just because you think you might miss out on a few dollars or something. It's not worth it. Just wait, be patient, wait for the pullback, and look elsewhere in the meantime. Because like I said, there's always opportunity somewhere.
So I'm gonna apologize to the listener because I'm sure some of them don't have no idea what we're talking about. so, so Matt, say your friend does not know what stock options are. What do you tell them that you're doing?
um, Honestly, I have a hard time explaining it where
Everyone does. Don't worry.
that it makes
That's why
sense.
so
I
many people
feel
don't
like,
do this.
yeah, I feel like it might just confuse people even more. But no, I try to use like insurance as an analogy, that you're selling insurance on the stock price so that you collect a premium up front that gives somebody else that owns the stock the ability to sell to you if the stock price falls to your agreed upon or price or the strike price, falls to or below it. You'd be obligated to buy at that price. So you're basically collecting an insurance premium in case the stock price falls, in which case you'd have to buy it. And you don't have to buy it because we've learned other strategies. There's other ways to manage the trade, which is great. So there's lots of options. That's what I mean. It's hard to explain to people because then the next natural question is, well, what if it does fall below the price? And it's like, well, now I'm stuck with this stock and that's falling, but it's not that simple. There's so much more to it, and there's so many more strategies. It's yeah, it like I'm still learning 5 months in. I'm still learning today, lots. So you got to be willing to learn. I find it best to learn as you go. Like I did paper trading for like a week. And then I just got to do it and learn as I go. Like I started with a small amount of money that, if it went to complete zero, that, it wasn't going to ruin me or anything like that. So I started small and just learned as I went, and then slowly added more as I got more confident and learned more. And I feel confident at this point. So I feel like even in 5 short months, I've been through a lot of ups and downs. So, and I've been able to manage through it all. So it gives you confidence after a certain amount of time.
And who would you recommend this to?
Anyone really, anyone, like I said, you have to have discipline. So if you're not a disciplined person,
Oh yeah, you're a
like
serial gambler? No.
yeah,
This is bad.
stay away, because it can be addicting, and it can get, you can get in over your head if you start taking on too many trades, or you're attracted to that premium, and it's like I said, it's so easy to just slide that button over and money pops into your account. It's nuts. So yeah, But if you're a disciplined person, you have a long-term perspective, and you can, you're not somebody who's going to get really emotional about these short-term ups and downs. Because if you let it get to you, I think it could really be a negative thing in your life when things go bad.
I would agree.
You have to be able to manage that. So
Yeah, you need a level head.
yeah.
Awesome. Awesome. Matt, thanks so much for doing this. We're a bit over time. I appreciate your time. I know you're busy. You have 2 kids at home, online schooling. I always like to allow my guests to give like final words without any direction for myself. What would you like to share?
Um, I think we talked a lot about investing and investing into the future, long-term perspective, things like that. I come from a background of health and fitness, and I think just one thing to consider as part of this investment is to invest in yourself and invest in your health and keep yourself healthy and able-bodied, so that when these investments pay off in the future, that you're able to enjoy yourself and enjoy your life and do the things that you want to do and do the things that you love to do. And so I think that would be it. Take care of yourself physically and take care of your health, just to enjoy yourself through the whole journey.
Awesome. Awesome. Matt, where can folks follow you? I know you're not big on social media. Like you don't
I
even have a
am
bio
not.
picture on your Facebook.
I only have Facebook to run the gym's Facebook page. That's it. I've never used social media outside of that G&M Fitness Facebook page in my life.
Let's plug the gym. Let's talk. What's the
Yeah,
gym? What's the website?
it's gnmfitness.com. So GANDM fitness.com. That'd be a place there that you could, through the contact us page, if you want to get a hold of me or something. I mean, you can look on Facebook. I'm there, but I'm not active. It's Matt Spada. So
Let's plug your
yeah, I
dad's
think that would
book.
be the
Where can folks get your dad's
yes.
book?
So he hasn't, it isn't out yet just because of the whole pandemic thing. A lot of main, our, his main target is mainly our members. So,
But the first book was a good
yeah,
health
so
book.
he has 2 books. The first book was on nutrition, and it's called Eat Smart, Eat Often, Eat Small. And so that's just about eating for a healthy body weight. And that you can find anywhere, even on our website, actually. So if you go to gnmfitness.com, you can actually get that for free there. And you can also buy a physical copy, Amazon, wherever, chapters. And then he has a new book coming out. It'll be probably the next few months whenever we're through this lockdown and everything. It's all ready to go, but that's called Start Right. And that will Start Right, the definitive guide to joining a gym for the first time. So it's for people looking to get started joining a health club. It's everything about what you need to join the gym, what you should be looking for in joining a gym, right down to what exercises to start out with, how to do them. It's a lot about strength training and how to get the most out of your workouts as a beginner. The things you need to know as a beginner to just make sure you're getting the most out of your time in the gym. So that'll be available at some point through our website, as well as Amazon and anywhere else you can buy books.
So you're a gym owner. Like I've been to commercial gyms, and do you still laugh at people that have no idea what they're doing?
Oh god, I try not to laugh. I mean, and
Yeah,
try
you're
to
right.
be
Shouldn't laugh.
helpful.
Okay, no,
The
sorry. When I start laughing is when they have no idea what they're doing, and they refuse to get any sort
Yeah,
of training.
that happens. Yeah, or even like free advice that is given and they still ignore it. But yeah, that happens. It happens. There's a lot of people that I mean, unfortunately, we have like some members that honest to God have been members with us for over 20 years and have made no progress because they're not doing the right things. And it's unfortunate and they don't want to listen. But if you get this book, start right. Even if you're somebody who's not a beginner, but maybe aren't sure if you're doing
Right.
things properly to get the most out of your workouts, then pick up the book for sure.
Fantastic. All right, Matt. Thanks so much again for doing this. Apologies, we
Hey,
had to do it
thank you.
again. And
No, it was fun.
awesome.
Thanks for having me.
Hope to see you in the real world when we start doing our
I
stock hacker
know.
meetups.
I can't wait.
Yeah. 'Cause it's like you said, like it's like especially when times are tough and almost to even bounce ideas off of people. Like,
Yeah.
I did this on this date at this price, and like, I'd be like, you did what?
Well, I gotta say, I really like the idea that you've been doing these kind of pop up meetings now with Tony and Diane. Those they help a lot because, like you said, we can't get together to um, bounce ideas off each other. So just even getting together once in a while over Zoom, it's been helpful. But I am looking forward to being in person. I can't.
And I'm sure even people would appreciate hearing yourself. Like I have a long term perspective. I don't mind owning this. Right.
Yeah.
Right. Where people are freaking out about a
Yeah.
small paper loss.
Yeah.
Right. I had to own Disney. I had to own Disney stock.
Yeah. What's wrong with that?
But no, some people would panic. Right.
Yeah.
Right. I made some good money on it.
Yeah.
Because I was
I
patient.
mean, yeah, exactly. Yeah. My intent is not to own the stock if I don't have to, but if I have to, it's not a big deal.
Awesome. All right. Thanks again, Matt, for doing this.
Okay. Thank you.
Have a good weekend.
Take care.
Bye.
You too. Bye.